Hey guys, welcome back to another week of Mortgage Matters in Minutes. I'm Brent Rasmussen, your host here, and today to talk about interest rate locks, what we call rate locks. And it's been a common question here lately with the ever rising interest rates on how can I lock, when do I lock, how long do I lock, what are my options? And usually in a normal market, interest rates don't move around very rapidly, up or down. They usually stay very, very close within a year's time frame, maybe 0.5%. Lately, what we've seen because of the discussion of inflation is rates have been bouncing up, down, all over the place, and it's been very stressful for people. So they want to assure they can guarantee what their rate is to stop their payment from going up as soon as they get a contract. So let's first talk about what is a rate lock. And that's a big question. What is a rate lock? A rate lock really isn't anything. It's just a guarantee. There's not really something that officially happens. It's just an agreement between you as the borrower and the lender that is going to give you that rate lock in a certain amount of days. So whether that time frame is 30 days they lock the rate in for, 60 days, 90 days, or a year's time frame. It's basically just an obligation that as long as you perform with the loan and qualify, the lender, once you do lock in that rate, will give you that particular rate. And the main question I try to explain to people is a rate lock really isn't a rate lock. It isn't really something you go to the store and you purchase and you own. It's not a real tangible item that you can hold yourself to. There's no letter, there's no agreement, there's no ownership. Basically what lenders are doing is they're playing shorts and puts. They're playing investment tactics and they're betting on both sides to make sure that they can honor that rate in 30 or 40 or 60 days because technically they can only give you that investment or that bond or that 30-year mortgage on the day you close and when they get that loan sold to Fannie Mae or Freddie Mac or FHA or VA. So really during that time frame before you actually close, the rates obviously go up and down and they don't know in the future exactly what the rate's going to be. Speculative always says that rates are going to be higher in the future, just like stocks generally should always be higher in the future. But no one knows always exactly what's going to occur, up or down. But lenders do technically give you that agreement. They say, hey, I'm locking in this interest rate, and that means you are locked in for this period of time. So a lot of consumers ask, well, when can I lock in my rate? And generally, we need to receive a purchase contract giving us the time frame that you need because all locks are for a specific period of time. Generally, they're 15 days, 30 days, 45, 60, every 15 days out to 90 days, 75, 90 days. And then it goes out farther than that, 120, 150, 180. So we start every 15-day increment from 15 days to 75 and 90 days. And then most lenders will do a lock every 30 days after that 90 days. I know it gets really confusing, but for example, the answer is you can lock for 15 days, 30, 45, 60, 75, 90, so on and so forth. But every one of those locks comes with a different interest rate or different amount of points. So what we like to see as lenders is the copy of the purchase agreement as fast as we can in our office. Because as soon as we know what the time frame is, the sooner we'll able to confirm and line you with that lender and say, hey, we picked this particular lender. Here's why, because they had the best interest rates or the best closing costs as of the day and how many days you need to lock in your interest rate. So it's very important out there for even realtors to know that getting that contract into that lender, even if it's on a weekend, is as important as it possibly can be because as we're seeing markets fluctuate as much as 1/4 or 0.5% throughout the day, you can, lose 0.5 or 1/4% in the morning compared to the afternoon. But if you're a lender and you receive a contract on Saturday, you can prepare for the markets to open up on Monday morning and hopefully get that information in. I can tell you in my office, there's a lot of days that we receive a purchase agreement on Monday afternoon. It's not intentional. No one's trying to harm someone. It's just everyone gets busy on their Monday mornings. And by the afternoon, they realize, oh yeah, I need to get that contract over to the lender. So you as a buyer, as soon as you're getting that signed agreement, which is a purchase agreement signed by the buyer and the seller, or as soon as you have an understanding that you guys both agree to terms and you know what the closing date is going to be, let your lender know so they can give you those options. Okay, we only need a 30-day lock. A 30-day lock is always cheaper interest rate than, say, a 60-day lock is. You can also, what we call, float throughout the process and choose not to lock it in. And you can wait until as little as 15 days before closing to lock. So there's different particular times and markets that you want to float and some you want to lock. Right now, most lenders are advising lock right now. I would say in 6 months or a year, the market may change, obviously, and rates might come back down. Then we might say, let's wait it out. Let's float it in. So we might have contracts that are not closing for a full year. Maybe they're building a house. And we might advise them, hey, let's not lock a long-term rate right now. Let's look at waiting till next spring and locking in that rate when maybe rates are better. So the biggest question is, when can I lock? There are some certain times when you can lock a rate without a purchase contract, but they're only going to give you a 15 to 30 day window to find that house, and then another 15 to 30 days to close. Or sometimes if that seller is not willing to close within that time frame, that lock just goes away. And it doesn't help you if you just lock on some indefinite time frame. So we talked about how long you can lock, and that's a big question because some people are building a house and they want to lock their loan for 9 months or 12 months. Again, most all lenders are going to allow you to lock long term. But in locking long term, you're going to have to pay extra fees, points, and take a higher interest rate, because when it comes to taking a investment gamble, the lender is not going to assure what's going to happen in the future of rates being better or not. So they're always going to assume they're going to be worse because that's what it takes to make that investment. And that's how the investment tools work, that they're going to invest and say, okay, we're going to put this money aside to use that when we need it, or take out an insurance policy to guarantee they can get that rate in the future. And that's why it costs you more points and a higher interest rate. So does it always make sense to do a long-term lock? It doesn't always. You want to get with your mortgage loan officer, find out what certifications they have and what they like to follow the mortgage-backed security trading, because every day there are individuals that we follow, high-level economists, that can tell you as a certain answer what may happen that day, that week, next month. And the more we can track the mortgage-backed securities and follow what's going on, the better advice a mortgage loan originator can give you as a borrower to answer your questions about when to lock, what to lock, how to lock, and all of those answers. So the biggest question always comes down to, when should I lock? And there's never a right answer for every person. Some people are very conservative and want to take what they can get. Right now, maybe the rate's at 7%, and every person wants to jump on that 7% rate no matter what and take that and guarantee it. Some people like to gamble a little bit more and say, hey, I'm going to wait it out. Maybe I'm going to try to get 6.75 over the next 2 months. And that's why the rate lock really is tough to advise all people, because you may, as the buyer, may not have control of the seller of when they want to close. And if the seller wants to close 90, 120 days down the road, that's harder for you to figure out what to do, because do you pay the extra fees to lock the long term, or do you wait it out? I will tell you, good loan originators follow mortgage-backed security trading, and the good loan officers are going to be able to advise you on what's best or what they should do from day to day, hour to hour, minute to minute. Because right now in these crazy swings of trading in the stock markets and the mortgage-backed security tradings up and down, every minute, every day might change. You know, something negative in the news might come out that'll affect inflation in the financial markets. Or the next day, something positive happens. So the more we can kind of be educated about the markets, the more control we have over what we need for our rate lock. So it's always important for you to work with your realtor as well to explain to them, hey, here's my risk factor. I want to lock my rate as soon as possible. So maybe you have to give up a little bit more in the home price to get a short-term closing date so you can lock in that rate. Or I've seen lots of clients agree to whatever closing date the seller wants, and they might not like that because of the uncertainty of rates are going in the future. Again, there's lots of different choices in rate locks, from time frames to when you can lock, how you can lock. But the biggest piece of it is communication. It's letting your lender know, letting us know as your lender when you're closing, what your time frame is, what the seller's time frame is, so we can give you the best education and information that can be had. Are we mind readers? Are we ever going to know exactly what's going to happen? No. But the more information we can provide to you and give you education for you to make the best decision for you and your family, I feel is the best in regards to your future. As a reminder, you may not keep that rate and that loan forever. A lot of people lock in 30-year loans, but as markets change up or down, there might be a day that comes where you want to refinance. And the rate lock applies the same way. When we refinance, we lock in that rate on a refinance, and you have to meet that time frame. As last week we talked about, time is of the essence. I know a lot of clients want to lock in their rate as soon as possible. Well, we explain to them, if you lock in this rate, you have to get all this paperwork to us by this certain period of time, or that rate lock goes away. So if you don't make that 30-day rate lock, that is gone away. It doesn't happen, or you can pay money to extend that rate lock. Extensions on rate locks do get quite costly, so we try to avoid that if at all possible. Also on refinance transactions, when you close, there's a 3-day rescission, meaning there's 3 days the federal government says that you can back out of that deal, and it doesn't fund until the 4th business day. So if we're locking a 30-day rate lock, we need to close by day 26, which really means we need to have everything to the underwriters by day 12, day 15, in order to get the underwriting process done, for them to condition any items that are needed, and you to dig those items up and provide those back to the lender. So in regards to rate locks, time is of the essence for all parties. If you lock in that rate, it doesn't mean it's guaranteed it's good forever. It's good within that time frame, and you do need to work with the lender to get everything in as quick as possible. I hope you learned a little bit today about rate locks. We're always here to answer more questions. If you have any topics or interests or ideas that you want us to speak about and educate you or the community as a borrower, as a realtor, we're always here to provide any information and education we possibly can. I'm Brent Rasmussen with Mortgage Specialists. You can phone call me at 402-991-5153, or you can check us out on our website at mtg-specialists.com. Have a great week. We'll see you guys all next week. Mortgage Specialists. Driven, trusted, reliable.